I'm pretty much investing with Aurora with zero risk. I could probably make a video of how I'm investing in this company with 0% risk. I'm not risking any money at all investing in this company right now, and I could possibly make a video about that in the future. If you guys give me 150 likes, I will show you guys how I invest in Aurora with zero risk. What's going on, guys? So it's as if things can't get any worse. We just seem to be getting more bad news and more bad news from Aurora every day. And what's even worse is Aurora earnings are coming up on February 13th. So hopefully you guys didn't invest too much money into Aurora, so that way you guys have a little bit of money left for Valentine's Day. But either way, in this video we're going to be talking about whether I believe Aurora is a buy right now, but I'm mostly going to be talking about whether Aurora is a buy after earnings. There's a lot of things we got to take into consideration, which we will be talking about in this video, and one of them is about the upcoming earnings, where Aurora is expected to have a $1 billion loss, which is going to be huge. Of course, we're going to be looking at charts as well. We're going to be talking about the upcoming earnings. I'm going to talk about some possible strategies to play out this company and how you could possibly play out the earnings. Just remember, there's always a lot of risk involved investing in this sector, so always invest at your own risk. Remember to always do your own homework, do your own due diligence, and never invest in a company unless you believe in it. But before we get this video started, I'd really appreciate it if you guys give me a quick thumbs up, and if you're new here, hit that notification bell, smash that subscribe button, and let me know in the comment section, what do you guys expect from Aurora in these upcoming earnings, or even in the following years? Do you guys plan on buying Aurora anytime soon? Are you guys staying as far away as possible from this company? Let me know. But for now, let's get this video started. So first things first, we're going to be taking a look at Aurora charts, and Aurora is currently sitting at $2 Canadian, down 2.44% on the day. And on my previous video, which I did talk about Aurora, I mentioned this support line right here. We're going to zoom in right now to the half-hour charts, and Aurora is hitting this $2 support line. So right now I do expect Aurora to have some trouble breaking below the support line, but what I do feel will be the breaking point for Aurora might just possibly be their earnings, which we're going to talk about today. So right now, as you can see, it's hitting the support line at $2 exactly. Some people might see this as a buying opportunity. People might assume that it might just bounce off the support line, since it's previously acted as a support line right here, immediately bounced back up. And if we go back in time even further, it previously used this line as a support line as well and immediately bounced back up. But we can't expect past performance to determine what's going to happen today or in the future. Right now, we're going to talk about why Aurora will possibly be breaking below the support line. And we're going to be talking about, is Aurora a buy? Like, is it a buy at these prices? Why and why not? But I think what's more realistic is, will Aurora be a buy after earnings? Because I do expect Aurora to decline even further after earnings. I could be wrong. Nothing is 100% guaranteed here, but from my expectations, I do expect Aurora to dip even lower below earnings, and I do think that's going to be the breaking point. What we're going to talk about in this video is whether we think Aurora is a buy right now, which I don't think it's a buy right now, because I do think it'll be better to be patient and wait for earnings to determine whether you're going to purchase this company or not. And I kind of want to talk about possible strategies of purchasing this company and what you want to do. But before we do that, let's look at American chart. And it's the same thing for American charts as well. Aurora right here sitting at $1.50, down 2.92%. The same thing, Aurora just hitting this bottom support right here. We're going to go into half-hour chart. And as you can see right here, Aurora is literally right here at this support line at $1.50. Now, the real question is it going to break below it? Is it going to bounce off it? In the past, we've seen Aurora bounce off this line right here. So a few things we have to take into consideration when looking at Aurora. One of them is their market cap versus how much money this company is earning. So right here, the market cap is $1.62 billion for Aurora. And for a company that has over $1 billion market cap, you would either expect to see a lot of growth in the company, or you would probably expect to see revenues of 100 million and up per quarter. And as you can see right here, Aurora's earnings have not been that great. So for the quarter of September 2019, Aurora's revenue was 75.2 million. For the quarter of June 2019, Aurora revenue was 98.9 million. And this is all in Canadian dollars. So I think it would be more realistic to look at Aurora's market cap in Canadian dollars right now, currently sitting at $2 with a market cap of $2.23 billion. So once again, for a company to be making less than $100 million in revenue per quarter and have an over $2 billion market cap, those numbers do not add up. So in a way, that kind of tells me that Aurora is overvalued. We all know that this is a growth company. This whole sector is based on growth and based on future predictions. But right now, based on the numbers that Aurora is reporting and based on their market cap, they still are a little overvalued. And in the following quarters, Aurora sales is expected to be in the $65 million range. So their sales are going to be decreasing even further, which leads me to believe that there's a strong possibility that Aurora's price could drop even further after earnings. Which leads us to this article, Aurora Earnings, here comes $1 billion loss. Aurora is expected to report its fiscal second quarter results Thursday morning, and they are expected to reveal a loss of $1 billion Canadian, thanks to goodwill and asset impairment charges, and it disclosed amid a big shakeup for the Canadian cannabis company. Aurora said it planned write-downs of $740 million to $775 million in a goodwill, as well as $190 million to $225 million worth of intangible property, plant, and equipment charges. So Chief Financial Officer Glenn Ibbott said that the impairment charges were related to operations in South America and Denmark, and its core Canadian assets weren't affected by the write-downs, beyond the non-cash impairment charges. Aurora also said that it was expecting to record a $12 million write-off for future product returns and price reductions related to products that were sold in prior quarters, mostly in the first half of the calendar 2019. So analysts polled by FactSet expect Aurora to report a fiscal second quarter revenue of $61.7 million versus $54.2 million a year ago, but the company's second quarter sales are expected to decline sequentially from the first quarter revenue of $75.2 million. The vast majority of company sales are from Canadian recreational and medical MJ. So as you can see right here, Aurora in September 2019, which was their first quarter for 2020, reported $75.2 million. And according to analysts, we're expecting Aurora to report close to $61.7 million in revenue, which is a decline from previous quarter, which is a huge decline from June 2019. Even if we go way back to March 2019, it's still declined. Maybe if we look at the bright side year over year, it might be going up because in December 2018, Aurora did report $54.2 million in revenue. But at the end of the day, it still looks like the company's taking steps back, and this will definitely turn off a lot of investors. I think pretty much anything under $75 million will be bad news, and I don't expect Aurora to report over $75 million in revenue. So that leads me to believe that on earnings day, after Aurora reports their earnings, I believe that Aurora will decline, especially if they report below 75 million, because that alone is another step back. We've seen how Aurora got beat up after they reported their 75 million, which was a huge step down from 98.9 million. And if they continue to take another step down, I do think investors will definitely be turned off and a lot of people will be selling. And that leads us to one of our questions. Will that create a buying opportunity, which we will be answering soon, but let's just finish this video. And then we look at Aurora's surprise history. Right here, we have the stock movement in the trading sessions following earnings reports. So pretty much out of all these earnings right here, Aurora has never had a green day after their earnings except for twice, which was on September 25th, 2018. And that was pretty much just when anything could go right with the whole sector because there was a lot of hype behind it. And then there was on May 15, 2019, which Aurora went up 3.6%. Besides that, Aurora has had very red days. And as you could see from their very last earnings, when Aurora reported 75.2 million, Aurora went down 17% on that day. And even when they reported close to 100 million, 98.9 million, Aurora went down 9.2%, mostly because they promised to release over $100 million in revenue, and they just went a little bit below it, which disappointed us investors, of course. So what are analysts saying? Carter, which I spoke about in my last video, gave Aurora a $1 price target. Jeffrey analyst Owen Bennett gave Aurora a $1.90 price target. Kirk rates the name a sell with the $2 price target. So all these price targets aren't looking good because right now Aurora is sitting at $2. If it goes down to $1, that means Aurora loses half of its share value. Even if it's a $2 price target, that just means that Aurora won't be making any movements in the next year. And if that article wasn't bad enough, there's another one right here, which is Aurora earnings are coming. How bad will it be? So in last week's pre-announcement, Aurora said it expected to report report December quarter sales of less than $66 million. That would be the second consecutive quarterly drop off. Worse still, the number would have been reduced by the impact of product returns and price concessions that might bring the number in below 54 million. Right now, I'm thinking worst case scenario, Aurora goes between 61 to 69 million. In this article, they're talking about how it can even be as low as 54 million. And if we go back to these charts right here, even if it goes back down to 66 million, that's still 3 consecutive quarters where Aurora's revenue continues to decline, which is definitely not a good sign for a company. And if their numbers are as low as $54 million in revenue, that will be even worse, because right here we have a year ago, they reported December 2018, they reported 54.2 million. That will just show that their numbers are as bad as back in 2018, which will definitely turn off investors. The MJ producers' warnings prompted BMO's capital market analyst Tammy Chen to cut her forecast for December revenue to 52 million from 79 million. She expects 81 million in negative cash flow. So I know some people might look at this like analyst expectations are low. As long as Aurora goes above analyst expectations, Aurora won't be doing too bad. But I don't think that will be the case. I think regardless, if Aurora does go below $75 million in revenue, Aurora will decline. And all signs are pointing to Aurora not going above 75 million in revenue. As a matter of fact, we're not even expected to go above 70 million. Some analysts are even expecting Aurora to report below 60 million. So now that we talked about all those numbers and we have a good idea of what might be happening on February 13th, which is when Aurora will be reporting their earnings, the question is, should I buy Aurora now? Should I buy Aurora after earnings? And it all depends on your situation. You have to look at all possible outcomes. One possibility is that earnings will be horrible, Aurora will dip, and it creates a good buying opportunity, and you pretty much caught Aurora at the bottom, and your share prices continues to go up from there on. That's one possibility, which could be the best case scenario. There's another possibility where you pick up Aurora shares after their earnings, and the company does not improve. The company continues to decline when it comes to revenue. Their earnings continue to get worse. There's even a possibility of Aurora doing a reverse stock split. So for those who don't know what a reverse stock split is, we'll look into it real quick. So in finance, a reverse stock split or reverse split is a process by which shares of corporate stock are effectively merged to form a smaller number of proportionally more valuable shares. A reverse stock split is also called a stock merge. So let's say a reverse stock split was to happen. That would mean right now Aurora has over 1 billion shares outstanding. It depends how many shares they decide to cut in half. Let's say they cut it down in half to 50%. So instead of having 1 billion shares outstanding, we would have 500 million shares outstanding, and their share value would double from $2 Canadian to $4 Canadian. The amount of shares that you guys are holding would decrease in size. So let's say you have 1,000 Aurora shares. Instead of having 1,000, it would go down to 500, and your share value would increase. In a way, it kind of manipulates your share prices, so it looks like your share price went up, but in reality, the amount of shares you're holding went down. So that's obviously something that shareholders don't want to see. Unless you do want to see a reverse stock split, let me know in the comment section and let me know why you would want to see a reverse stock split in Aurora. So that would be another bad case scenario. Worst case scenario, of course, is the company goes bankrupt. And I think at this point, anything is possible. So how would I do this? Let's say I own 0 shares of Aurora and I want to get into it because I see prices are super low and I have about $1,000 to invest. Well, first of all, if I only had $1,000 to invest, I would not go all in right now. Maybe I would invest $250 after earnings because I saw that the price dipped. That way, if prices continue to decline, I would add another $250. I would average down my price. In your head, you have to know that there's a possibility that you could lose all your money. This is a very high risk sector to invest. So if you guys don't have the tolerance or don't have the balls to deal with this kind of volatility, then this is not the sector for you. But then again, you know what they say, high risk, high reward. Aurora has always been a high risk, high reward company for me, and that way, as soon as I see profits, I take it. I don't want to risk losing my profits, let alone losing my initial investment. After earnings, I probably will be picking up some shares, but I'm going to be picking up a small amount of shares for me. Let's say Aurora does go down to $1, I'll probably pick up 500 shares, which is a small position for me. $500 $500 for 500 shares, that does not sound bad at all. And if it continues to decline, I think at some point I will stop purchasing Aurora shares if it starts going into the penny stock range, because at that point I will have concerns that this company can go bankrupt. So that's how I plan to play out Aurora before and after earnings. So should you buy Aurora right now? First of all, you should not be listening to anyone when it comes to making any investments. Always make sure to do your own due diligence, make sure you do your own homework, and invest in a company that you believe in, and invest with money you're willing to lose or obviously willing to grow. So don't listen to me just because I'm saying don't buy Aurora right now. Look into the company and see whether it's a company that will be profitable in the future, or if it's a company that will continue to lose money and burn through cash. And right now it really looks like Aurora is burning through cash. A lot of things I want to see. I want to see some changes in the company. I want to see who their CEO is. I want to see Nelson Peltz. Why did Aurora bring in Nelson Peltz? What is he planning? I'm hoping he's up to something. So I have to see a lot of changes before I can confidently start investing in this company. For now, I do think it is a gamble. It's still a company I'm invested in. It's still a company I believe in the long term. And right now we're going to see a lot of growing pains, which this could possibly be the buying opportunity we've all been looking for. But don't go in there with 100% confidence that you cannot lose this money. Go in there knowing that there's a possibility to lose this money, but there's also a huge possibility that you can 10x it within the next 5 years. I guess that's my conclusion. I don't really know if I answered the question, because the answer is kind of, it all depends on you, all depends on your budget. I'm pretty much investing with Aurora with zero risk. I could probably make a video of how I'm investing in this company with 0% risk. I'm not risking any money at all investing in this company right now, and I could possibly make a video about that in the future. If you guys give me 150 likes, I will show you guys how I invest in Aurora with zero risk. But anyways, that's it for this video. I hope you guys enjoyed it. Good luck in all your investments, and if you guys enjoyed this video, please give me a thumbs up, hit that notification bell if you're new here, smash that subscribe button. Let me know in the comment section what you guys are expecting for these upcoming earnings. And that's it for now, guys. I'll see you on my next video. Bye bye.